Hello, it's a great welcome from here in Delhi, and of course a very pretty but very icy morning. It's pretty chilly out here in Delhi today, and a lovely morning anyway. Hope each one of you, as always, are also in very fine spirits in spite of very chilly weather almost in every nook and corner of India. So now in this particular chapter, Accounting for Investment, we have decided to actually pick up. It happens to be a pretty formidable chapter, but before we proceed further, let me actually caution you that we have decided to completely revamp and revise this particular chapter. It means you will have to download the new revised notes which we have already uploaded. Correct? So it is important for you to download those notes because later on when we are going to attempt the questions, so that you should not confront any sort of difficulty. So without wasting much time, we come directly to the business end. Here we go. As you can see on your screens, I have already written Accounting for Investment. This is the chapter which we are going to pick up. In fact, in this particular chapter, there are two major or broad segments, you can say, because there is AS 13 also. AS 13 deals with accounting for investment, so we are going to cover AS 13 along with this particular chapter itself, and of course accounting for investments. As for accounting for investment is concerned, even you will see later on that we have divided this particular chapter into almost 4 sections. You will see later on when you will have a look over the notes, you will find over there that we have now categorized the questions into some segments. So there are 4 sections which we have attached along with it. Accounting for investment we have divided in 4 sections. We will see later on the first section, Section A, Section B, then there is Section C, and there is Section D, or Section 1, 2, 3, 4, whatever you may like to say. Section 1 or Section A, whatever it is, we will see under it we have covered the questions related to dividend-bearing securities. Correct? That means when we say dividend-bearing securities, it means we are talking about investment in shares. Dividend-bearing securities. Dividend-bearing securities. Nearly 14-15 questions we have encompassed under it. Besides that, there is Section B also. Under Section B, we have, or we would cover, you can say, questions related to interest-bearing security. Interest-bearing security, all, as you know, means investments in bonds or debentures. Interest-bearing securities. Interest-bearing securities. Besides that, we have Section C. Even under interest-bearing securities, you will find 14-15 questions. So 30 questions under first 2 sections itself. So you can see we have increased the length of this particular chapter, especially in the light of the fact that we are noticing that almost in every examination, a question is being tossed out of this particular chapter. Correct? Then there is Section C also. And Section C, we will see later on that it deals with what? Section C, we will see later on, it deals with multiple investments. What we mean by multiple investments? Multiple investment, later on we will see that it means the investor has invested in both dividend-bearing securities and interest-bearing securities also. So under this question, under this section, we have covered such questions. And then finally, we have kept a section D also. Section D. Under Section D, we have covered questions on standard. We will cover the standard first, and questions related to the standard we will cover in Section D. So Section D relates to questions related to accounting standards. So that is how we are going to go about this particular chapter. Correct? So accounting for investment, since I have written AS 13, so first we are going to cover up this particular part, AS 13, which is not very difficult, to be very honest with you. AS 13. Correct? So we will take some guidelines of AS 13. AS 13. As we know that AS13 actually deals with accounting for investment. I need not require to tell you, but before we proceed, let me also remind you that each one of you will have to write all these things, whatever I'm going to write here. Investment deals with, AS13 deals with accounting for investment without any iota of doubt. Deals with accounting for investments. When entity or an individual makes investments, how those investments should be recorded, how those investments should be categorized, at what value those investments should be carried in the financials. When I say financial, it means financial statements, and how those investments should be disclosed. In fact, these are the facets regarding which we will have some guidelines from this particular standard. AS13 provides guideline, as I said. AS13 provides guidelines. AS13 provides guidelines with respect to one, classification of investment. When we make the investment, we need to categorize it, classify it into current and non-current. So how we are going to do that? Some guidelines are provided. Classification of investments. Second, carrying value of investment. Carrying value of investment means at what amount we should carry the investment in the balance sheet. Carrying amount of investments. Should we carry the investment at cost, or should we carry the investment in the balance sheet at market value? So regarding that, some guidelines will be there. Classification of investment, carrying amount of investment, their presentation, how those investments should be presented in the financial statements, and of course regarding disclosure, how those should be disclosed, what disclosure we need to make regarding the investments. So these are the facets regarding which AS13 will provide some guideline. As I said, it's not a very tough standard, I've already told you. However, the chapter is not going to be quite easy, correct? Now, what exactly the investment? As per this particular standard, we will see investment simply means assets which are held by an enterprise. Why? To earn some income, either in the form of dividend or interest or some other form of benefit. Correct? So next point deals with that exactly. So as per AS13, as per AS13, investments are assets held by an enterprise for the purpose of earning, income by way of. So investment simply refers to assets which are held by an enterprise. The purpose is to earn some income in the form of as I said a moment ago, dividend, interest, royalties, or for the purpose of capital appreciation. I will explain this point, capital appreciation, later on. However, at this moment, it is suffice to say that investment, what exactly means? So, investment means you have kept some assets with you just with the purpose of earning some income, or so that such asset appreciate in the value. So, in both the cases, you will have some income or benefit, appreciation. Capital appreciation. It is important to note in the beginning itself that term investment, so often we say what exactly it means, term investment. Let me make it clear. The investment could be in debts, it could be in shares. Investments, as far as nature is concerned, generally are the financial rights. For example, if I happen to buy the share of a particular company, what I am going to get? When I say I am going to get the shares, what shares means? Share is nothing but it is a paper, correct? It is just a paper. We call it certificate. So I'm holding a certificate which is acknowledged by the company that this particular person has invested in that particular entity. If I invest 1,000 share of rupees 10 each, let us say, that means I have given 10,000 to that particular entity. So that certificate is simply signifying and acknowledging that this particular person has invested 10,000 rupees in that particular company. So that is why shares, bonds, debentures, these are nothing but financial rights. So generally investments are in the form of financial rights. However, investment could have some other physical form also. That is exactly we are going to see here. Term investment. Term investment. Term investment is pretty wide term. First of all, we must understand that term investment is pretty wide term. It is pretty wide and includes investments in what? As I said, shares, debentures, these are common examples of investments, bonds, even nowadays, so often we invest in mutual funds. You must have heard about it. Lots of advertisement is there on part of government regarding mutual funds. And their tagline is in Hindi, mutual fund sahi hai. That is the tagline we so often hear, correct? Mutual funds. However, investment also, term investment also includes investments in gold. Nowadays, you have heard about election bonds. So even investment in election bonds is an investment. Gold, then investment in silver, bullion. So investment has many facets. It has both tangible and intangible, what we call nature. Correct? And one important point I would love to, because I'm not writing it over here, I would like to bring to your notice that investment also includes the term investment property. What we mean by investment property, suppose I have purchased a piece of land, and the basic purpose of acquiring that particular land is not to use that land in what we call in our business. Rather, we have invested the amount in the land so that later on when the price would rise, we would sell it off. That means here the purpose of what we call this investment in land is not to use the land in our business, rather to sell it off. So that is nothing but investment in land. Are you getting my point? That is known as investment property. So term investment will also include term investment. Term investments also includes what? Term investments also includes investment property. I will use the red pen. Investment property. Investment property. Got my point or not? As I said, land held for sale and not for use in business and not for use in business is an example of what we call investment property. However, as per latest amendment, such investment property must be measured at cost only, should always be carried at cost only. What this means, suppose today I have invested 10 lakh rupees in a piece of land or in a plot of land, whatever you would like to say. Now at the end of the accounting year, I purchased the land for 10 lakh. Let us say at the end of the accounting year, its market value is 15 lakh. If I will carry the land at 15 lakh, it means I am using revaluation model. I am using revaluation model. There are two models which have been now suggested by accounting standard AS10. Correct? One is related to cost model, another one is revaluation model. If I will carry the land at the market price, then it means I am following revaluation model. However, AS10 clearly states that investment property, investment property is covered by AS13, but its measurement is covered by AS10. And AS10 states that investment property must be measured at cost. It means the value or the amount which you paid to acquire that particular what we call investment property. Suppose, as I said a moment ago, in fact, that I purchased the land for 10 lakh, its value at the end of the year is 15. So as per AS10, not as per AS13 I am talking about, as per AS10, such investment property will be measured at cost model, that means at 10 lakh. Correct? So I am writing here with red pen. Investment property should be measured as per cost model. As per cost model. Now this guideline is given by AS10. AS10, which relates to property, plant and equipment, as you know, correct? So valuation of investment property is covered by AS10. However, investment property is covered by AS30. Is it clear to you or not? Anyway, the point here is that you need to know actually what exactly the investments are. So investment is pretty wide, as you must have seen by now. Correct? Also, we need to know that AS13 does not apply to, there are always some exclusions, so does not apply to. AS13 will not apply to what? A. income earned from investments. Income earned from investments. Generally, we receive income in the form of dividend interest, such as dividend interest, royalties. Generally, we receive income from investment in this manner. So AS13 is very clear that whatever income you are receiving on account of your investments, those incomes will not fall under the purview of AS13. As you know that such incomes are covered by actually AS9. AS9 covers such income. AS9, which deals with revenue recognition, isn't it? You must have covered that already, and you have already gone through this particular statement. So AS9 covers such incomes. That is the reason, in fact, why it is not covered by AS30. Besides AS13, then this is the first exception. Now we move over to the second exception. Second exception is with respect to investment in mutual funds. Actually, the accounting for mutual funds is covered by regulatory authorities like SEBI, etc., or RBI guidelines. So AS13 will not apply to investment in mutual funds, correct? Similarly, venture capital funds. Venture capital funds. AS13 also does not apply to venture capital funds. Name itself is suggesting what exactly venture capital funds is. Venture capital funds means when two or more entities associate themselves and invest in a particular project, that becomes venture capital funds. There are separate regulatory bodies which cover actually the aspects of accounting of these, so that is the reason actually they are kept outside the purview of, as I said, AS13. Then similarly, it will also not apply to operating losses. Operating losses. AS13 does not apply to operating losses. So you need to know actually which are the area which are kept outside the vicinity of AS13. Now, after having a look over all these facets, slowly and steadily, now we are moving over to some important aspects. Now, next part of this particular standard deals with classification of investment or types of investments. Classification or types of investment. Classification or types of investments. Classification or types of investments. As I told you in the beginning itself, that this particular standard actually deals with what we call classification aspect also, disclosure aspect also, at what value we should carry. So we need to know the guidelines of this particular standard, although it is not very difficult to fathom, to understand it means. We will see later on that as per the standard, investments are broadly classified into two types. One is known as, and you are already aware of all these things, one is known as current investment, while the other one is known as non-current investment. One is current investment, other one is non-current investment. Non-current investments. Further, you should also be aware of this particular fact that current investments are also known as short-term investment. Current investments are also known as short-term investment. Short-term investments. Short-term investments. Correct? Current investments are also sometimes referred to as temporary investments. Temporary investments. Temporary investments. On the other hand, non-current investment, as each one of you are very well aware of this, is also known as long-term investments. Long-term investments. It is also known as fixed investments. So there are two broad classifications. An enterprise must categorize as per AS13, although we can categorize investment into many types, but as per standard, investment need to be categorized from the accounting perspective into two major categories, that is current and non-current. Correct? Now, fixed investment. Obviously, we have written current investment. We need to know what exactly the current investment are then. I need not require to tell you what exactly the current investments. Current investments are those investments which are held by an enterprise for the purpose of what we call sale within a span of 12 months. Today I have acquired these investments, but I know that I am not going to keep these investments with me for a period exceeding 12 months. Within the next 12 months, I am going to dispose them off. So such investments are known as what we call current investment. So current investments are those investments which are held by an enterprise, which are held by an enterprise, for sale within a span of 12 months. So intention here is to dispose the investment within next 12 months. Within next 12 months. It is important to note. Correct? Then, on the other hand, what is non-current investment? Standard simply says that non-current investments are basically those which are other than current. However, it also means that, it also means that basic intention here is to keep the investment for a longer period of time. Correct? Investments, however, we will go by the definition of the standard. Investments other than current investments are categorized as non-current investments, or categorized as non-current investments. Non-current investments. Indirectly it means intention here is to keep the investment for a period in excess of 12 months. We want to actually keep this investment, hold this investment for a pretty prolonged period of time, correct? And basic purpose is to earn regular income. So these are the two broad classifications given by this particular standard. And now we move over to the recognition of investment. Next guideline deals with recognition of investment. Recognition of investments. Recognition of investment. Before we move further, you must understand there are two types of recognition. One is initial recognition and another one is final recognition. Initial recognition means when I am doing the transaction, the date on which I am acquiring the investment. And this is known as initial recognition. So when I am acquiring the investment, at what value I should recognize those investment? That is the point, number one. Number two, recognition also means final recordings. So there are, in accounts basically, there are two types of recording. Initial recording, that is first time recording, and the final recording. Final recording name itself is suggesting that when you are finalizing your accounts, at what value you are going to record the investment, that is the what we call final recording. So standard of course is going to deliver some guidelines regarding the same. We need to know that, correct? So as far as initial recording, first, let me write here initial recording under recognition of investment, part A, initial recording. INITIAL, initial recording. Initial means first time, the day on which you are acquiring the investments. Today, let us say I bought 1000 shares of rupees 10 each. Whatever date today is, so on this date, at what value I should recognize the investment? Standard states that initial recording should always be at cost. Should always be at cost. That means whatever amount you have incurred in acquiring that investment, at that value you are going to recognize the investment. However, when we acquire the investment, suppose I am interested in buying the shares of a particular company, and because I am busy with my profession, I hardly get time to actually buy the shares of the company by myself. But nowadays, if somebody has to buy the share, he hardly goes in the market to buy the shares. Market means capital market. In order to buy the shares of a particular company, all we need is to actually simply contact the brokers. There are several brokers. So they will provide the services, and whatever company share I wish to actually buy, I can easily buy it with a finger click. Are you getting my point? However, those who are going to help me in buying the shares of a particular company, brokers or sub-brokers, they are going to charge something. It means that whenever I am going to invest or buy the shares, or for that instance, any financial instrument, then I may have to incur some expenses also. So whatever expenses I have incurred in connection with acquisition of such investment, that too shall form part of the cost. Remember one thing. So initial recording, correct? So initial recording as per AS 13, as per AS 13, initial recording of investments should be at cost. Should be at cost. Now what does this cost signifies? Cost signifies sum of, cost signifies sum of all these things. Sum of what? I will use the next sheet. Sum of A, purchase price. purchase price means the number of share into the value per share. For example, 1000 share you have bought of rupees 10 each, but let us say you bought it at the rate of 20. So 1000 into 20 will be your purchase price. Purchase price. Besides, you are going to add any brokerage or commission. Paid to acquire these what we call shares. For example, you bought the shares of a particular entity through a broker and your purchase price is 1,50,000, and let us say 1% is the charge which is brokerage is which the broker is demanding. So 1,50,000 into 1%, 1,500 will also become the brokerage. That too will be considered as cost of your investment. Remember one thing. So any expenses which you have incurred in connection with acquisition of the investment will be capitalized, in other words. That means those you are not going to debit to P&L, you are simply debiting it to your investment account. It means, then see, because you have bought the shares from the secondary market, see, you must understand at this particular point itself that there are two types of market. One is primary market and another one is secondary market. For example, there is a company ABC Limited, and this company makes a public issue of shares. And let us say you fill one application to buy some shares. When you are buying the shares this way, it is known as acquisition of shares from primary market, because company is making a public issue. But as we know, everyday company cannot make the public issue. Company makes the public issue, let us say, once in a 10 year, and very rarely, isn't it? So how to buy the shares? Suppose today I am interested in buying the shares of a public company or a particular company or ABC company. ABC company today is not going to make the public issue. So what I will do, I will simply contact a broker, ask him, is there a shareholder of ABC willing to sell the shares? That means generally when we say that we are buying the shares or acquiring the shares, in fact, it means we are acquiring the shares from the secondary market. Are you getting my point or not? When we buy the shares directly from the company, when it makes the public issue, it is known as primary market. However, when we buy the share from the market, it is known as secondary market, and most of the transaction regarding sale purchase takes place in the secondary market, correct? So, because these shares are in the name of some other shareholders, now I want to acquire the title of those shares, so I will have to pay some legal charges. So, any legal fee which I would pay, legal fee, or for that instance, any stamp duties which I may have to incur. These are the common expenses which one need to incur when it acquires the shares, correct? Stamp duties, etc. And nowadays, as we know, there is short-term securities transaction tax also, isn't it? So if you have paid any security transaction tax also, then also it will become a part of the cost. So by adding all these things, whatever value you are going to get, that will be known as the cost of the shares. So initial recording is always done at cost. You shouldn't let it escape out of your memory. Is it clear to you or not? Is it clear to you or not? Absolutely clear, I hope so. Till up to this particular point, we have discussed some final points. We'll continue with that. We'll come to now final recording in the next session. Correct? These are shorter duration classes. So in the next one, we are going to have a chat regarding what we call final recording.